Morning, Steve Freed in Chicago with the morning grain comments. Well, happy Friday to everyone. As far as the weather is concerned, looks like here in the United States we've got some open weather until Monday, and then a front moves across the Midwest Tuesday, Wednesday, and Thursday with good rains and good coverage. The market's expecting that corn planting on Monday will be somewhere between 19 and 22% in Illinois. Maybe half the corn crop got planted this week. Spring wheat maybe 13 to 16% planted versus 3%, and the soybeans maybe 4% versus 2%. Farmers are focusing a lot on the corn. We would expect winter wheat crop ratings to go up maybe 1 percentage point to 32%, good to excellent, but still well below last year. As far as other news, soybeans down a little bit. Still concerned about the relationship between U.S. and China as far as soybean tariffs and imports are concerned. Yesterday, the Chinese did stop one soybean cargo from coming into China as they inspect it. And that raised some concern by the Chinese crushers that they will slow down the unloading of U.S. soybeans. Again, yesterday's in the export sales report, there were no new China sales of U.S. beans. On the other side of the coin, Brazil is probably pretty active in selling beans to China because they do need it for their crush. And so we'll just kind of see if there's under the market, this small change, slow change away from China buying U.S. beans to buying Brazil beans. Corn market, firm. They're thinking that as the farmers plant corn, it doesn't allow them to sell corn, and so that's providing support in the cash underneath the marketplace. We also see that the Brazil dryness continues, and that could actually down the road help U.S. corn demand. And the wheat's up a little bit. Next week we've got the annual crop tour that goes through Kansas. They're going to try to assess crop conditions and the outlook for the production. And historically, their numbers have been really good compared to what the USDA says in May. We did note that the USDA announced that they are going to, on May 10th, put a special line for their world grain supply and demands that separates China from the rest. And so, especially in corn, some of the world corn numbers have been distorted. As China stocks come down, it makes world stocks come down, but we really can't, as a market, get a hold of those stocks, or it doesn't really make that big of a difference from a price standpoint. So they're going to separate those numbers to give you a more realistic view of what global corn stocks are doing outside of China. We also see a big drop in open interest in the May contract yesterday. Beans down 27,000, corn down 51,000. Liquidation of the May contract may limit the upside in prices. So in general, corn's probably in a trading range. Can't break because of the lack of farmers selling and the uncertainty of weather. Can't trade much over $4 because the farmer would begin to sell at that point. Wheat market's trying to figure out the balance between too much global supply and what's the U.S. crop going to be this year as we go into the growing season. And soybeans all about China and U.S. relations. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.